Welcome to Vivekam videos. This video is made in the middle of the week because we thought it would make a lot of sense to the people who actually seek safety to their investment as a priority than the likely returns, because returns are something nobody can predict, but safety is something which we can inject into our own portfolio by being extra careful while selecting a stock. So this video is going to be focused only on suggesting you large cap stocks. When I say large cap, my threshold is 1 lakh crores. Any company that has got less than 1 lakh crores of market cap is not being considered. Again, there are a lot of companies which have got more than 1 lakh crores of market cap, but in them, I wanted to select the companies that have done well in their sales growth and also profit growth. And profit growth should be more than the sales growth in terms of percentages. Once we do this, we understand these are all the growth stocks. And the next parameter that we check is our model assigns a fair value. How the sanctity of our fair model calculation is going to be demonstrated to you today in the video. And once the accuracy level is established, that means our estimates are holding true in that company. If we find a gap between the fair price given by our model and the current market price by a minimum of 30%, then we call them investment worthy. So today I am going to cover 11 stocks from this list which are looking very attractive for the people who seek safety as a top priority. But before I get into the details of individual stocks, I want to tell you that we are conducting an event in Khammam, that is in Telangana. This event is being open. That means the registrations are already open. Many people have already registered. And if you are staying in Khammam or nearby areas, and if you have not registered yet, I request you to immediately use the opportunity. The link for registration to the Khammam event is available on the video on the left hand side top. If you click on that, the details will come. I would suggest you to register it immediately so that you don't get disappointed when the event unfolds on 15th June evening. Me and my whole team is very eager to meet up with all the investors of Khammam because we wanted to conduct for the first event in Telangana from Khammam. We will definitely follow up with other events in other places, but the first event is in Khammam. I hope it will definitely help you. Now, having said about Khammam event, let us try to get into the core point of discussion for today's video. That is, companies that are more than 1 lakh crore in market capitalization. How I try to take this show is, I would present you the list of top 10 stocks, top level 11 stocks, and then give you some statistics on how much was the total revenue has gone up and how much was the profit rise in the same companies. And then another column is the current market capitalization of these stocks. And then I give you what is the current market price. Because I am doing this video on Tuesday at around 11 or 11:30, what is the time, what is the price prevailing now? And I also will present you the fair value based on the fundamentals. And then I also will give you the gap. This will give you an indication of the reasons behind shortlisting these companies. But that is not enough. Sometimes, you wonder, where are these figures coming from? What is the value to be given to this? So in order to make sure that you get conviction levels very high about our model of shortlisting the stocks, I will present you a few statistics, not necessarily about all the stocks on the list, but I will give you the gist of it. I will give you the statistics and how we approach selection of any company. Being a company registered in Telangana, being a company belonging to the Telugu community, I want to present. I'm not like I'm biased against any other state, but as a matter of respect for the Telugu pride, I want to take up the Dr. Reddy's Laboratories as the first choice. It is in the 11th in the list. Though it is in the bottommost in the list of 11 companies, I want to take it up now and show you few things before I tell you why it looks attractive. Let us get into the details. The screen you see now is Dr. Reddy's graph. What is this graph? It is presenting you the price data from 2020 to 2024, that is in a blue line. But you will find something like straight lines of, like on the blue on the top and also orange color at the bottom. What are they? As soon as the companies announce results, our model, our proprietary model or Vivekam's proprietary approach determines what is the high possible given the set of fundamentals at that point of time, what is the low possible given the set of fundamentals at that point of time. The ranges will be determined. And why we do that is we wanted to check whether this company being widely held, not like closely held company or management is to holding too much of percentages. When a company is widely held, market cap is high, market liquidity is high, the price formation, price discovery is supposed to be very, very justified. So having said that, we wanted to check how many times or how much percentage has it been complying with the estimates given by our model on high and low. As you can see on the screen, right hand side bottommost block is 88.69% is the accuracy rate. That means this company also has a tendency to break our boundaries some points of time, but on 88.69% of the times it is falling between high and low determined by our model. That gives us the confidence that our fair price is actually holding true. Apart from the accuracy, if you see the middle block on the right hand side, you will see 101.10, that is 1,01,000 is the market cap of the stock as of now. That means the market cap is more than 1 lakh crores, so it is eligible to be considered for our investment for today. So that is why we have selected Dr. Reddy Laboratories. Now let us get into the hard numbers of Dr. Reddy's. Promoters are holding only 26.65%, but FIs are holding 29% in this company and mutual funds are holding 8%. That means together they are holding 37%. And if you add it to the promoters holding, 73% is held by people who have a long-term focus for their investment, unlike retail people who want to jump in and jump out too frequently. So this is a long-term story. This is a very good company. And now, is this company growing now in the latest quarter based on our model? Yes, that's why we are calling it as growth. And if you see the current market price is 6,074 and our fair price given by our model is 8,478. That means the gap between these two is 39.58%. That is why if it is more than 30%, it is eligible to be considered for our investment. This is figured in our list. And what led us to believe that this company's fair price at 8,478 is justified? If you look at the numbers in the sales volume, starting from 18,000 crores in 2020, it has come all the way up to 27,916. That is, in all the periods of last 16-17 quarters, it is the highest when you look at a trailing 12-month period. And profit margins, it is at gross profit was at 56.15. And if you look at the EBITDA, it used to be around 3,000 crores earlier, that is in 4 years back. Now it is 8,800 crores. And if you look at the profit after taxes, it was less than 2,000 crores in 2020. Now it is 5,600 crores. So everything has gone up and so are the margins. If you look at the net profit margin, that is also ascending and moving upwards. All things are moving in the right direction for this company. That is why this company is selected as good company for investment. And if you look at the PEG ratio given there, it is only 0.44, indicating it is good for shorter term of 1 year or less than that, even for long term, because PEG ratio of less than 1 implies that it is a very good bet for the long term investment also. This is how we approach. We understand whether it is complying with our estimates and price prediction, and then we check whether the sales are growing, whether the profits are growing, EBITDA is growing, and apart from all of them, is the margins also are expanding. Once all of them are expanding, that is a growth company. And then final choice is compared to the fair price. If it is below the fair price by at least 30%, that is considered investment worthy. Now let us get into the next company. We have considered Dr. Reddy's. Now let us go to the top company in our list. This is Tata Motors. 46% is held by promoters. Tatas are known and respected all across the globe, not just in India. Why? Because their corporate governance is impeccable. So nobody doubts the intentions or disclosure norms followed by Tata Group any point of time. And in this, 28% of the equity or 29% approximately is held by mutual funds and FIs together. That means 28 of this and 46 of promoters. If you add all of them, 84% is held by this group of investors. That means you, me and all HNIs, big HNIs, ultra HNIs, small people, all of us put together are handling or working around with only 16% of the total company. Again, Tata Motors is a cyclical industry because if the economy is not doing well or economic upliftment is not good for the people, the industry may not really do well. But like today, where the markets are going at a very high speed, industrial activity is also picking up. Apart from that, economic upliftment also is happening. A lot of people are being taken out of the poverty line. That means demand for automobiles is going up. Apart from all these financial reasons which strongly support buying argument, we also have to look at the numbers. If you look at the numbers at 4,34,984 crores or 4,35,000 crores, it is a historic high for Tata Motors in trailing 12 months ending on 2024 March. And if you look at the profit, it was in losses for several times. That is why if you look at the kind of companies on the right hand side column, okay to buy, you find no growth several times, sometimes it is growing. If the losses are being reduced, it is also growth. If the profits are expanding, it is also called growth. But if the losses are expanding, it is no growth. If profits are slipping, it is no growth. So that is why for every quarter, we track the companies, and only when the margins are improving and only when the price is below the fair market price by 30%, we call it investment worthy. That is why 2024 March you find Y is marked. That means okay to buy means yes. And now, as you can see, net profit margin today is now 7.25%, and expected price is, fair price is 1660 against 987 rupees is the market price. That means 68% is the scope. That is why this company is worthy. And what is the current market cap? 3,62,000 crores. So considering all of them, this company is eligible to be the top favorite of our analysis today, being the top favorite company. Now let us go to the next company. After Tata Motors comes Hindalco. This is in aluminum. As most of the people may have observed by now, aluminum industry is doing very well under the carpet without many people noticing it. There are two companies, Hindalco and Nalco, but Nalco being less than 1 lakh crores capital, we are not considering it for today's discussion. So Hindalco, if you look at it, this has been showing an accuracy of 72.49% as shown on the graph on the screen. And this market cap of this company is 1,52,000 crores. So it has already passed both of them. More than 70% accuracy, good to go. And more than 1 lakh crores, it is good to go. Now let us get into the hard data of this company. Hindustan Aluminium, promoters of Birlas are holding 35%. And how much is being held by FIS and mutual funds put together? 27 plus 13, 40% is held by them. That means 74% is already locked with these three entities, three groups. So what is left for all of us? Only the balance amount of about 25%. So 25% is all that you have held by either insurance companies or the HNIs, ultra HNIs, retail investors, small investors, anybody. All of them put together is only holding 25%. Why are we suggesting this company to be bought? Since this is a metal company, the aluminum is traded across the globe, so the international prices also dictate the prices in India. So we cannot expect the sales to continue to expand because these are not inventing a metal. These are only using a metal that is universally available. So here there may be small exception. The sales need not be always on the growth. So long as the profits and margins improve, that is good to go. Now looking at the sales volume, 2,16,000 crores is a tad less than 2,23,000 or 24,000 crores touched in the past. 2,23,000 crores was the sales volume in 2023 March, but now it is 216. That is still okay because as I told you, aluminum is traded across the globe. But if you look at the profit after taxes is 10,155. What makes it interesting is it is not 10,155 which attracts our eye. If you look at the kind of tendency of from 2023 September, it was 8,423. Then it jumped to 9,392. Now it jumped to 10,155. That means profits have started looking up again. In this kind of metals and cyclical industries, once the trend sets in, it normally lasts for a longer period of at least 3 to 4 years time. That is why this is expected to do well in the coming quarters also. Keeping that in our mind, our model has given a fair value of 1,023.85, whereas the current market price is only 675. So the gap is 51.55%. So this is in the second in the list. Now let us go to the next company. After Hindalco comes NTPC. This is in power generation. All of us know what kind of importance is being given by BJP government for the power generation in the country and also for distribution, because they have decided to build 3 crore new houses apart from industrial activity and apart from Atmanirbhar Bharat. All these industries, all these households demand power. Unless you produce power and distribute, it is not going to be happy. So that is why NTPC also being in power generation is going to do very well. And now if you look at the graph on the screen now, the market cap is 3,56,000 crores, whereas the accuracy estimate is unbelievably 91.58%. That means it is exactly following the model of Vivekam. If we set a high and low price, it is religiously moving between high and low. That gives us courage to expect the future trend also to continue the same thing. Now, if you jump into the hard data, 51% is held by the government and 18% is held by mutual funds and 18% is held by FIS. So, all of them put together 87%. So, that means only 13%, a very minor stake is left for retail people like you, me, and including HNIs and ultra HNIs. And what is the current market price? 366. What is the fair price? 546. That means a gap of 49% is there. That means it is a good company because market cap is more, and apart from all of that, the scope to grow is, our gap is 49%. What made us give this 546 as the fair price? If you look at the sales volume at 1,78,000 crores, it is at the highest level in the last 4-year period. And if you look at the profit, unbelievably 20,332 crores, which started from 6,000 crores 4 years before. Now it is almost like 3.5 times of that profit. That is why it gives me so much of confidence that this company is on the path of growth. And here also, if you look at 2023 December and the rightmost column, in 2023 December, we call it no growth. Why? Because a quarter before, that is on 23 September, the margin was 11.84 and it slipped to 10.4. That is why we call it no growth in that quarter. But now from 10.4, it jumped to 11.39. That means ascending growth has started. That is why we call it okay to buy. So all these factors contribute a substantial buying argument for NTPC. Now let us go to the next stock. State Bank of India. I don't need to show the graph because SBI also is mostly in compliance with what we estimate. And State Bank has got 57% is held by government and almost like 22% is held by FIIs and mutual funds put together. And that means 22 plus 57. 79 or 80% is held by only these three entities. So 20% is left for the retail people to invest or disinvest. And now, is this company growing? Yes, it is a growth company. What is the current market price? 835 rupees. And what is the fair price? 1202. So the gap is 44. This also is eligible to buy. And banking sector is going up. This banking, particularly State Bank, has got so much of non-performing assets in the last government's regime. And after that, this government has taken over the reins of the power, and then they cleaned the balance sheets of the banks, and now the bank has got very negligible NPS in their balance sheet, and that is why it is growing very fast. Because of financial inclusion, because of demonetization, bank accounts are surging in India, and people are depositing more money, white money into the banks. That is why banks have got so much business to do. And State Bank is in an enviable position of being a market leader in the country. All the factors put together, net profit margin being 15.51 from 15.42 in the previous quarter, margins also have stabilized. And with a unlimited growth potential on the top side of revenue, and the margins being maintained, this company with 44% scope to grow is next in our list. And next comes the company DLF. This is into the real estate. When real estate is being given a focus because BJP government believes that real estate will contribute growth to almost 20 more industries. Name it electrical appliances, name it tiles and other things. And there are so many cement, lot of equipment. And apart from that, it is a major employment generator because you need a plumber, you need an electrician, you need a mason, you need a cleaner. You need not everybody, every kind of workforce is required to promote housing. That is why real estate companies are going to be the favorite for some more time. And DLF is complying with our estimate to the extent of 72.4%. Market cap is 2,14,000 crores. So it has already passed these two tests. Now let us look at the hard data of DLF. What is happening in DLF is 74% is held by Mr. Singh, who is the major shareholder. That means 75% only he can hold maximum. He is already holding 74.08. How much is held by FIS? 16.5%. How much is held by mutual funds? 3.5. So they are holding another 20%. So 74 plus 20, 94. That means the float or public can only touch 6% of the shares. Promoters will not sell the shares. That means if you want to buy, the market rate will go up. If the mutual funds pay more attention to this, the price will jump pretty fast. Looking at this company, the PAT at 1,630 crores now is highest in the history, and the margin is 25.37, which is also very, very high compared to the real estate companies. That is why 864 rupees is the market price now, but our fair price is 1262, which means the gap is 45.99. So DLF is also in our top list. And now Instead of going through each and every company's hard numbers, graphs, and repeating the whole story again and again, I am sure that you would be interested to find out what are the companies to be bought. So now let me go back to the list now. On the screen you will find after DLF, that means Tata Motors, Hindalco, NTPC and DLF, apart from Dr. Reddy's we have seen with the data. State Bank also we have seen the data. Next in the list is Adani Energy Solutions, because the market price is 1026 and expected price is 1469. The gap is 43.11. And Grasim Industries is the next in the list and it has got a scope of 42.76. Next is Punjab National Bank, that has got a 42.59%. Next in the list is Trent, which is a master of fashions, and it has got a 42.52% scope to grow. And next in pharma is Zydus Life Sciences, which has got 1522 as the fair price against 1088 is the current market price. That means 40% is the scope to grow. And last in the list is Dr. Reddy's. Now you have a companies, 11 companies worth more than 1 lakh crores market cap in each of their own rights. Apart from that, as you can see, sales difference, all of them is marked in green. That means they are growing. And net profit difference is in most cases, if not in all cases, it is higher than the sales growth. Sales are growing, margins are growing faster, fair prices are higher, current market prices are lower, gap is more than 30%. What else you need? You need only the courage and conviction to buy these shares with an idea to make money in the next few months. I wish you will definitely make this opportunity, and we will keep coming up with these videos to make sure that you get the required information for profitable investment journey in your life cycle. Thank you very much.